Alright, moving on to our last three ETFs, XLB, XLK, and XLU. Moving on to XLB here. Again, I'm going to revert back to what I was saying when I was discussing XLE. I like the upside for materials and energy. Why? If we begin to look again, we're seeing that inflection point pattern. We had this huge tank, and now we're building up on that low volume. Volume starting to come in again. Are we going to get a little push that's going to stay below 20 million shares, daily shares traded? Are we going to see little baby touches against the 50, the 100, the 200, the ascending trend line? Or are we going to see a massive rollover or a massive breakout? If we get a massive breakout, we have a $4 window to work with, hands down. If we get a massive breakdown, we have a lot of padding. It would take a lot to take this market down. I know a lot of people that are pretty bearish out there saying, oh, we're going to push the 1100 level. Oh, the S&P is doomed if we keep doing this and that and this and that. And I agree with you. I agree with you on some portions of your theory. However, when we begin looking at risk reward and we begin looking at the different ETFs and where they stand from a technical perspective, we are looking at a better risk reward to the long side, even if this run is overrun. For lack of a better term, this run is overrun. I do think that we're going to see a correction, but when it comes to XLB, XLE, and even a little bit in XLI, I think you're going to see more of a consolidation than you are going to see a price correction. So I would look for the price of XLB to stay within the this lateral trend line here at 3650-ish, 61.8, this Fibonacci retracement level. And of course, if we zoom in here, we're also going to be looking at how the shorter termed simple moving averages, your 5, your 10, your 20-day simple moving averages, and your longer term simple moving averages that normally act as some solid support, your 50, 100, and 200-day simple moving averages. We're gonna be watching them pretty closely alongside of that resistance of 35.50 and the ascending trend line. XLB, however, is definitely one to watch, especially if gold explodes. The fear trade, of course. Moving to XLK, technology. I love technology, and I guess you could say I've been talking technology up a little bit, but that's because I have faith in technology, and I have faith in a lot of the tech companies that could promote the price of technology sectors and technology sector ETFs like XLK. I foresee and I have foreseen technology to normally be the leader or beginning pusher of a run if it's not the materials and energy sector or sectors. Now we're looking at a lateral trend line here at 24 bucks. We kind of hit it, we pushed it, but now we started pushing back. If we zoom in here, we're looking like we might roll over. Again, we have very nice padding, but this is getting very, very tight. We have not seen, again, we're breaking those records when it comes to volume distribution, and I know I went over this the last time that we looked at XLK and the last time the market pulled back and got toppy. We were looking at the weekly, but again, this is kind of just more of an in-depth, day-by-day basis because it is a daily chart. We have seen now some huge volume distribution. What were we looking at the whole time that XLK was rallying? Well, we had the double bottom here at 12, really 13. Huge volume, and as we saw this price build the entire run to 24 bucks, what happened? Volume accumulation every single time we got a push, it was lower, lower, lower. Boom! Spike. Price really, really took a hit here. This is the one thing we need to be worried about when it comes to the tech sector, and if the market were to roll over, the tech sector could really, really roll here. We're getting tight, we're getting choppy, and we could really lose a lot of market momentum if XLK goes and the tech sector goes and goes hard. So I will be watching this, and if we pull back in tech, I won't even touch the market. We're looking at then the $21 level and really the 200-day if the 50 and the 100-day can't hold up the price. Moving on to our last ETF, XLU, utilities. as weird as it sounds, I like utilities. Why? We discussed that very, very tight range that we had here, very similar to XLE, I believe it was. Yep, very similar to XLE, and we broke down. A lot of that had to do with the collaboration in between gas utilities and gas when it comes to XLE. However, now we're looking at something a little bit different, seeing that we had this huge point of inflection here at 32, declined on actually low, or declining rather, volume distribution. Now volume is at that low level again. We saw it here. We saw it here. We saw it here. We saw it here. And each time, sometimes it would top. Sometimes we get that pullback and we continue higher. Sometimes we top. Sometimes we get that pullback and continue higher before breaking down and dying. Again, we top. And then we kind of corrected, but then we, in the end, and in the long run, we moved higher. So what happens? We are at a crossroads. We are on the ascending trend line. We are in the middle of a conglomerate and a gamut of different simple moving averages, whether they be short term, 5, 10, 20, or longer term, 50, 100, 200. It's very interesting, and it almost looks like the shipping sector stocks, EGLE, dry ships, EXM, XL Maritime. They all looked very uncoiling and very very tight. And then sometimes there were times where all of these simple moving averages, like XLU right now, combined together, and the price either boom exploded or bleh, just puked. So that is one thing that we need to watch. It could explode. It really, really could explode, and we could get a move to 32 again and retest this $32 resistance, this price resistance. However, we're going to need volume to do it. Volume is going to come. It's going to, and if it comes, we need to look at what kind of volume it is. If we get a breakout here above 31, I would be pretty positive that we're going to go higher and retest this $32 level. And that the simple moving averages really held the price in check, along with the ascending trend line. However, if we go lower, we could go as low as $28, because that's really where the next price support is, below all of these simple moving averages. Do I think that utilities could single-handedly drop the market? Not one bit. But it's important to watch utilities. Whether they be the biggest laggard of the entire market or not, it's important to watch the utilities, because you may get these secret little moves that take a long time to develop. But again, this is a $10 move. If you held for those months, you would have made $10 per share. It's pretty darn good. So look for the volume, wait for the volume to come in, and wait for that break into the 10 million daily shares traded. And see whether or not we get a $2 downside or a $2 upside move. It's that simple for XLU and the analysis of XLU. I am not going to be going over IYT, TAN, IBB, URE, all of those. I'm going to be pinpointing a couple of different ones tomorrow night in another free vid. For now, just remember, we are toppy. We are overbought. This move is overrun. It is up to the overall volume of the market to determine where we go next. Don't be anticipatory, be reactionary. If the market breaks out, go with it. The trend is your friend until the trend reverses on you. Be cognitive of when that trend is going to reverse. Watch your volume patterns, follow your broad market statistics, and make sure that you are knowing what kind of company you're getting into before you get into it. Number 2 on my trading steps list is know your target. That is all for tonight, ladies and gentlemen. Enjoy your evening. Good luck for the rest of the week. I'll be back either this weekend or sometime tomorrow with some more free vids. Again, enjoy your week. Good luck and good night.